Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Israel intensifies airstrikes and ground assaults on Gaza and Lebanon 1 year on from those deadly October the 7th attacks by Hamas. From soft landing to no landing, Asian stocks rise and bond traders buckle up after Friday's hot US jobs report. We're going to look ahead to this week's data on inflation. And less than a month until the US election, the Democrats kick off a media blitz while Donald Trump returns to the site of July's assassination attempt, supported by Elon Musk. We'll have the latest. So it's a turnaround in sentiment on the back of that jobs data on Friday that left European and US stocks in positive territory on Friday. But for the week, you are still down last week in both the US and Europe. Today, though, European futures pointed to gains of around 0.2%, 0.3% as things stand. Yes, the jobs data was stronger. Unemployment fell to 4.1%. Wages were up, the strongest growth in jobs that we've seen in about 6 months. Yields then spiking, a sell-off in treasuries. And we continue, of course, to monitor how markets are readjusting as they start to reduce their bets on a future cut from this Federal Reserve. Still expected, 80% chance, but that's down from 100% for the month of November. And 50 basis points, at least for now, has been phased out. European futures, though, pointed to gains of 0.3%. Goldman Sachs upgrading their view on Chinese equities. FTSE 100 futures getting a lift from upside that's coming through in terms of the pricing on copper and iron ore. And that links to the China story. Currently, the FTSE 100 pointing to gains of 0.3%. S&P futures currently a little lower by 0.1%. Nasdaq futures pointing lower by 10 points. Let's flip the board then and have a look at the Asian markets with that Goldman call, contrasting with some of the caution that you're getting from the likes of Invesco and Nomura, who are saying, hang on a second, valuations are starting to look a little bit rich in some parts of these markets in China. We need to see the policy implementation. Goldman, though, saying you could see further upside, potentially 15, potentially 20% on Chinese stocks. So that is playing into the mix, as is the strong jobs data in the US in terms of the optimism within the Asian session. MSCI Asia Pacific then, the benchmark up 1%. The Hong Kong listed companies, the Chinese Enterprises Index, Chinese companies listed in Hong Kong currently see gains of close to 2%. The Nikkei over in Japan also having a solid session, adding 867 points. Let's look the board and look cross-asset. Then we talked about the yield move, dramatic as it was in terms of particularly at the front end last week. Yields up about 35, 36 basis points on the 2-year. Currently the 2-year at 394, closing in on that 4% level then as markets once again rethink the next steps for the Fed. Euro-dollar at 109 as Villeroy of the Central Bank of France suggests that, yes, the ECB is very likely to cut at its meeting this month. That's from Villeroy. Brent, $77 a barrel, currently down 0.3%. We watch, of course, the tensions in the Middle East, and Bitcoin at 63,445, up around 1.3%. Let's get to the geopolitics, the Middle East and the tensions there. Of course, 1 year on from the dramatic and disastrous events on October the 7th, of course, last year. Israel's military launching an aerial and ground offensive in Gaza over the weekend. Thought to be the largest in months. That's as the country marks that 1 year, of course, since those deadly attacks. Let's bring in our Horizons Middle East and Africa anchor, Germana Pesecci, for the details. Joining us from Dubai, 1 year on then, Germana, since October the 7th, and the horror that we saw being unleashed in Israel. Is the conflict that has now spread any closer to ending?
Well, a sober and traumatic day for Israel. If you rewind back to almost this time, 365 days ago, one of the singlest, deadliest days in Israel's history. 1,200 people were killed, and of course 250 were then held as hostages, of which about 100 of them are still in captivity. And that was 1 year ago. And it marked a significant turning point for the region and for the events that have unfolded since then, with Israel going on the offensive and launching its largest military campaign against those Hamas militants in the Gaza Strip. And you fast forward to today, the Palestinian Health Ministry put the total number of deaths at more than 40,000. You have more than 90% of the population within the Gaza enclave displaced, and no sign of a ceasefire, even though, as I mentioned, around 100 of those hostages are still held in captivity. But it is not just a front in Gaza that is being waged. It is now being transformed into a multi-front conflict. We've been talking about the second time there has been a direct attack from Iran into Israel this year. The first one took place in April. Israel responded. But of course, just a week ago, Iran also fired almost 200 ballistic missiles towards Israel. And it is expected to respond in some shape or format in the next couple of days. And how that response is going to look like, again, will shape what the regional situation is going to look like from here. And I haven't even mentioned the third front that has opened up, which is perhaps the most active front, and that is the conflict that is intensifying in Lebanon now, with Israel now starting a ground incursion into the southern part of the country, the border that started 1 week ago, with ongoing airstrikes continuing not just around Beirut, but around other parts of the country, with the stated aim of destroying Hezbollah military infrastructure. And so from Israel's perspective here, it's very clear that the reason that this conflict has taken on a multi-dimensional format is because they're going after their opponents, and specifically Iran's axis of resistance, represented by Iran themselves, by Hezbollah in Lebanon, by Hamas militants, and the Houthi rebels around Yemen too.
Okay, and Jemima, you point, of course, to what has been described as that inevitable response from Israel to that Iranian attack. And you touch, of course, on the developments as well on the ground in Lebanon. Do we have any clarity on what the objectives are for Israel in Lebanon at this point?
Well, Israel's stated objectives and the war objective that they introduced a couple of weeks back was to restore security to the north so that the 60,000 odd residents who live in northern Israel can return back safely to their homes without being exposed to the risk of rockets being fired at them by Hezbollah. And so on the back of that, the conflict within Lebanon has been intensifying. Airstrikes around Beirut, central Beirut, and even in the eastern Bekaa Valley, close to the Syrian border, have massively intensified over the weekend. Almost 30 airstrikes alone on Saturday being reported, stronger even than the airstrike that took out Hassan Nasrallah the prior week. The ground incursion continues, though not a lot of detail there on what exactly is happening on the border. There are reports that around a dozen Israeli soldiers have been killed, though IDF do state that they have managed to dismantle around 2,000 Hezbollah targets. Now, while this is all going on, the humanitarian situation in Lebanon is deteriorating rapidly. The Lebanese Prime Minister has talked about 1.2 million people being displaced. The death toll has risen to more than 2,000. Schools are on hold. About 60% of children who would be going back to school are also displaced. Right now, aid has started coming in. The UN supplying their first shipment of humanitarian aid coming through this weekend, and still political stalemate in the country with no sign of a ceasefire.
Okay, Bloomberg's Jemima Persechi, thank you very much indeed on the latest as we continue, of course, to monitor the tensions in the Middle East. Meanwhile, the ripple across to the oil markets as well, with oil opening the week slightly lower. Just checking Brent for you right now, which is trading at 77.79, down 0.3%. This, of course, as traders weigh Israel's potential retaliation, something that, of course, Jemima was talking about there, against Iran, with US President Joe Biden discouraging a strike on Tehran's crude fields. Joining me now for the details in terms of how the market is reacting to this, Bloomberg's Stephen Stupczynski. Stephen, what scenarios then, when it comes to the oil space, are traders watching for?
I think right now the oil market is just watching for the retaliation. When the retaliation comes, you should expect an immediate increase in oil prices. And then once the dust settles, there will be, okay, what exactly has been affected? I think we're going to be testing the $80 Brent level. If there is any sort of hit on any of the oil infrastructure in Iran, which suggests that we haven't fully priced in that risk at the moment. You are up, compared to $70 Brent, we're at $77 Brent over the last week, so we're up about 10%. but still it could go further if we do see some sort of attack on the infrastructure. Now, the level, if we get about 1.5 to 2 million barrels a day of Iranian crude off the market and OPEC Plus doesn't step in to kind of fill that void, you're seeing probably Brent continuing up to the mid-$90 level, according to Goldman. Now, there is an expectation, as I hinted, that OPEC Plus could come in and add more to the market, but if they don't add, then you're going to see oil prices continuing to rise and stay steady in that $90 level, according to the analyst reports that have come out. Now, there is also a view that maybe nothing happens at all, and Israel does not attack any of the Iranian oil infrastructure. It's not in their best interest. If oil prices rise, that's not great for Israel because they import oil. So if there is no immediate attack on the infrastructure, then I think you're going to quickly see oil prices deflate back down to the $70 Brent level. The reason being that the fundamentals are bearish in the market. Besides this war risk, there's a bit of an oversupply. Shale drillers in the U.S. are drilling quite strong despite the price level, and OPEC Plus is adding more barrels to the market at the end of the year. On top of that, U.S. demand is not as resilient as some thought, and you're looking at the U.S. economy, maybe not as strong as some were expecting, and China has also not been as strong as what traders were expecting as well for this time of year. So all that together, those are the scenarios that the traders are watching out for.
Yeah, Stephen Straczynski, thank you very much. Indeed, breaking down the competing tensions then across these oil markets. We appreciate the update. Let's stay on what is unfolding across these markets with that macro lens, because traders have been trimming bets on the scale of rate cuts by the Fed for the remainder of this year. Chicago Fed President Austin Goolsbee lauded a strong September jobs report, and it was strong, but warned that it is just 1 month's data.
The whole report is a superb report. You really couldn't ask realistically for a better report. I still think as a central bank, you don't want to react too much to 1 month's report.
OK, let's bring in Bloomberg's Valerie Teitel for the market reaction to this. Let's start with the jobs report then. And it was a blowout, Valerie.
It was a blowout, Tom. What a day for the markets, that Friday afternoon session. But if you take a step back and just review how big the move in two-year yields was last week, it was a monster. It moved 36 basis points higher. It marks one of the biggest weekly moves since 2008, when any pricing for that 50 basis point cut, those 50 basis point cut hopes, totally erased in the market. And Tom, I urge you to just take a look at the 2s-10s curve. We're now 3 basis points away from re-inverting. But what does all this narrative about a no-landing scenario mean for global markets? Let's flip the board and look at my next chart, because I want to remind everybody that if the Fed eases less, there is less room for global central banks to ease on the back of that. Now, we did hear from an ECB member over the weekend, Villeroy. They're still talking about this October cut, so maybe a bit too early for the market to price this in. But we have a lot of highly indebted corporates and highly indebted governments out there whose yields trade at a spread to the U.S. Let's think about the UK. They have their budget at the end of the year. We have France, whose budget is only just this Thursday. We need to remind ourselves that if treasuries don't have less room to rally, these highly indebted governments, there's a bit more pressure when they come to release their budgets later this month.
Yes, a reminder of the challenges of the UK as we count down to that budget, and maybe what the read across is going to be for UK gilts as well. Onto corporate space now. Valerie Teitel with the market breakdown there. Thank you. Onto the corporate space right now. There's some lines crossing just a few minutes ago, around 10 minutes ago. This is coming through from the German newspaper Handelsblatt in conversation, it seems, with the CEO of Commerzbank. Ms. Orlopp there commenting in terms of this potential, at least UniCredit would hope, potential takeover of Commerzbank by UniCredit. We know UniCredit have built up that stake in the German lender. Orlopp saying and telling Handelsblatt that the UniCredit merger would not advance the banking union, and the merger would lower Commerzbank's credit rating. Saying, though, Bettina Orlopp, that she had a good dialogue with Mr. Orchel, who, of course, is the CEO of UniCredit. So watch that stock, of course, at the open later today. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. And top of the page right now is that Goldman call that Chinese equities could go another 15 to 20% higher. Talking of which, mainland Chinese markets reopen tomorrow after the Golden Week holiday. We're going to take a closer look at what to expect and tie in, of course, that Goldman call. They're facing a bit of pushback from others. How far does this Chinese rally have to go? Plus, Clement Galic, the CEO and co-founder of UnseenLabs. It's a space tech company that uses satellites to track ships at sea. A fascinating story in terms of the market around space. Stay with us for that conversation later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday. Plenty of focus, of course, on mainland Chinese markets tomorrow when they return after that week-long holiday. Here's a look at Hong Kong markets then trading today. We're seeing further upside. And Goldman Sachs, meanwhile, helping that sentiment by upgrading Chinese stocks to overweight. That from Tim Mo and team. Let's bring in our China correspondent at this point, Min Lo. Min, Goldman's bullish call then today, giving stocks, it seems, another lift. Is that expected to extend to the mainland reopen tomorrow? We're all building up to this reopen in mainland China on Tuesday.
Yes, definitely a lot of momentum building up because, look, the CSI 300 came into this holiday seeing an 8.5% gain before the holiday. We're likely to see it return with a similar size gain, if not more, because there's a lot of catching up to do, right? Hong Kong markets was rallying even when the mainland markets were closed. If you look at the A50 futures trading in Singapore, that was up some 15% while mainland markets were closed. And we had also been hearing from brokerages this huge demand for new account openings here in Hong Kong. Many of those new clients are actually mainland Chinese people flying to Hong Kong, especially during the holiday, to open up new trading accounts. And don't forget, travel data, preliminary data from the first day of the Golden Week showing record high passenger trips, and also that NDRC briefing tomorrow raising expectations of more fiscal stimulus to come. So we're expecting a monster rally tomorrow when markets reopen in mainland China.
Yeah, OK, a monster rally tomorrow in mainland China. Wow, people are actually getting on planes and flying to Hong Kong from mainland China to open up accounts. That's amazing. So you mentioned the NDRC. It's a really powerful arm of the government, of course. The acronym may seem dry for many of our viewers, but this is a really important agency within the apparatus of the government of China. And they're coming out with some details, at least a press briefing tomorrow, where we may get some more details in terms of these fiscal policies, support for the economy, right?
That's right. So NDRC is the top economic planner of the country, and we are looking out for whether there will be more measures in terms of boosting consumption, boosting employment, shoring up confidence in the private sector, for instance. What we might not get, though, is the scale of that fiscal boost, because any sort of new bond issuance, that is going to likely be announced by the Ministry of Finance, and those officials are not going to be present tomorrow. So we think it's unlikely we'll get a number there, but we will get some signs of which sectors of the economy are going to receive some support. And by the way, the NDRC also has the power to approve which projects get funding from those funds raised from special bonds. So if they give a hint of that, we might want to also look out for whether they will say announce widening of the usage of those bonds funds to maybe buy back unsold homes. So these are some things we want to look out for tomorrow. And in terms of fiscal stimulus, many economists are expecting some 2 trillion yuan to be issued, but perhaps that's not going to be announced tomorrow.
OK, Min, on the trade front, the EU voting on these tariffs then on Chinese EVs. Has there been any response from Beijing yet?
Yeah, not yet. Well, we have the press briefing, the Foreign Ministry press briefing at 3 p.m. Hong Kong time later today. I think that's what we want to look out for. But I guess the next stage of this EV tariff war, if you will, I think what's quite interesting was that Volkswagen CEO has proposed that some Chinese companies get some exemptions from these tariffs if they invest in opening up plants in Europe. And we know some companies like BYD, Chery, for instance, are looking at opening up plants in Spain, Hungary, Turkey, for example, and both the EU and China have agreed to keep negotiations going even after that vote has been completed. So until November, when these tariffs will kick in, there is still some possibility that maybe those tariffs could take a different form or shape from what has been announced so far, which is up to 45% on certain companies. So that's something to look out for. And another thing as well, if these companies invest in Europe, then how welcome will they be? Perhaps the next phase will be scrutiny over, whether there should be a minimum local content requirement for some of these factories that will be built in the EU as well.
Okay, Bloomberg's China correspondent Min Lo, as we look out for that press conference, maybe a response in the next few hours from Beijing to those tariffs. Min, thank you. Coming up, how financial influencers are fueling a retail boom in risky ETFs, promising big returns. We're going to break you that story and bring you the details. There's been quite a significant move into some of these products. That is coming up. This is Bloomberg. Welcome back now. Today's Bloomberg Big Take looks at the growing number of amateur investors plunging into the complex world of derivatives-powered ETFs. Yes, derivatives-powered ETFs and amateur traders. What could go wrong? The products dangle huge payouts, riding big-name stocks, but industry professionals and regulators are urging caution. Here to walk us through this phenomenon is Bloomberg's Charlie Wells. Charlie, what is driving interest in these ETFs then?
Tom, I mean, the pitch is almost kind of tailor-made for YouTube or TikTok. And so what you basically get here are, a lot of these finfluencers who will go on.
Did you just say finfluencers?
I did just say finfluencers, financial
right,
influencers. And, yes, exactly. And basically, the pitch is, invest in these ETFs and they sell options. Those generate cash and they come back to investors, as dividends. And so you get a lot of these people talking about how, I used to have a 9-to-5, now I live off dividends. This is all great. And we're seeing a lot of interest here. So $50 billion into these derivatives enhanced ETFs over the past year, or this year so far, and then 164 launches. So a lot of interest, but of course, there's no free lunch and there's some serious risks here.
Yeah, okay, a lot of interest in the interest. 50 billion US dollars. People are giving up their jobs for this, Charlie? What are the risks then?
All right. So, look, these are really complicated products. And, you got some rule changes from the SEC back in 2019, 2020 that allowed some of these more complicated ETFs to come to the market. And so the concern is that, look, professional traders even have a difficult time with some of these strategies. What about the everyday person? There's volatility issues. You can get these really big payouts. But, of course, with big upswings, you also get the risk of downswings. And then there's this really interesting issue of total return here. So you might be getting payouts from some of these ETFs, but the issue is that, with some of these share prices, when they go down, that actually can leave you in the red as far as total return is concerned. That's complicated, and that doesn't always get translated into the TikTok videos.
Is this a fad, Charlie Wells, or is this a long-term trend that's going to bake itself into our financial system?
It's interesting, Tom. So I think certainly a trend, certainly kind of a flavor of the week moment here, but we also have to know, the retail investor is here to stay, right? We've seen that kind of investor class come to be a serious part of the financial world. Of course, ETFs as well are evolving. They're changing into, a more active investment vehicle, certainly compared to, say, 10 years ago when it was kind of a very kind of vanilla type of investment. But look, what I know about covering retail investors is that there's a lot of excitement on the way up, but the minute there's a crisis, the minute that something starts to go wrong, it's crickets.
Yeah, it's cricket. Yeah, they go a bit quiet, don't they, on Reddit when there's a crash. Charlie Wells, thank you very much indeed. It's a really fascinating story, worth checking out, of course, on Bloomberg.com and on the terminal. Of course, retail investors getting exposure to some of these more creative ETF products. Right, we are going to switch focus because coming up 1 year on, of course, from the October the 7th attacks on Israel by Hamas, we have the latest from the region. That is coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Israel intensifies airstrikes and ground assaults on Gaza and Lebanon 1 year on from the deadly October the 7th attacks by Hamas. From soft landing to no landing, Asian stocks rise and bond traders buckle up after Friday's hot US jobs report. We can look ahead to this week's data on inflation. And less than a month until the US election, the Democrats kick off a media blitz while Donald Trump returns to the site of July's assassination attempt supported by Elon Musk. We're going to have the latest on the US election countdown. Let's check in on these markets then. Another solid day on the session, in terms of Asia. We'll break that down for you shortly. But of course, the read across is there. European futures pointing to gains of 0.3% after losses, it has to be said, for last week. Both the US and European markets closed for the week lower, even if there was some green on the screen by the end of play on Friday. The jobs data coming through stronger in terms of the unemployment rate dropping, wages up, a much bigger print than expected. We do look ahead to inflation data then on Thursday, and the focus there as markets now start to reduce their bets on a November cut. It's still there, but they've gone from 100% to about 90%. European futures then pointing to gains of 0.3%. FTSE 100 futures up by 21 points. S&P futures edging lower by a tenth after the gains of Friday. Nasdaq futures lower by 33 points at this stage. Let's flip the board and look at the Asian market then, because the mood around the Chinese equity story is still pronounced after the gains, of course, since those measures were announced. The Chinese mainland market reopens on Tuesday. Chinese stocks listed in Hong Kong currently up 1.5%. The broader index across the region up 0.9%. The Nikkei as well. Japanese stocks getting a lift 2.3%. Part of that is around the optimism as well on the US economy. The Japanese yen currently just off by 0.1% at 148.59. Let's flip the board and look cross asset. We saw a big move lower in terms of treasuries with yields up. And on the 2-year, you're closing in on that 4% level, 3.95 right now. Euro dollar at 1.09, softer by 0.1%. Francois Villeroy of France, of course, the central bank governor there, saying that it's very likely you will get another cut at the meeting this month. Brent 77.74, down 0.4%. We keep an eye, of course, on the tensions in the Middle East. And Bitcoin up 1.3% in the session. Let's get to the Middle East right now, because it's as Israel marks a year since those deadly October the 7th attacks by Hamas. It remains locked into a multi-front war with no clear end in sight. Democratic presidential nominee, meanwhile, Kamala Harris, was asked about the conflict in an interview on CBS's 60 Minutes. OK, let's bring in Bloomberg's Bill Ferries. Bill, we heard there then from the vice president, the presidential candidate, of course, for the Democrats, on what she is expecting and wants to see from Israel, obviously 1 year on from this devastating, brutal attack by Hamas. And since then, so much has changed on the ground in the region. And it's a conflict that seems to be spiraling at this point.
Yeah, there's really no sign that the truce, even an interim truce that the U.S. has been pushing for let's say 5 or 6 months now, is anywhere closer to reality. You have Israel continuing to go after Hezbollah positions in southern Lebanon. You have it with a renewed attacks in northern Gaza, and then of course much of the world waiting to see if and when Israel responds to that wave of attacks from Iran just last week. So if anything, the situation appears to be escalating, and certainly looks unlikely that there's going to be any kind of a truce or de-escalation before the U.S. presidential election. And this could easily carry on through into the end of the year now.
OK, I mean, that's a pretty sober assessment, isn't it? And it's clearly factoring in, it's clearly a factor, at least, in terms of those, that run-up to the US election, of course, in November. And we heard the vice president, the presidential candidate, being asked about that. What does they're kind of moving, the Democrats now moving onto the front foot in terms of these media appearances. They've been criticised for not putting Harris in front of TV cameras and reporters more regularly. What can we expect then in the final weeks of this race? And how significant is this pivot that seems to be coming through from the Democrats?
Yeah, if you remember that first month after Kamala Harris was basically the de facto Democratic candidate for the election, she did almost zero national media appearances, very few interviews. And her running mate, Tim Walz, has also gotten some criticism or Harris's campaign has gotten criticized for not putting him out there more. We're seeing a bit more of both of them. Kamala Harris doing a blitz of different podcasts and shows, things like the Call Her Daddy podcast, 60 Minutes, The View. So what we're kind of seeing from that so far is these aren't generally the most going to be the most hostile media appearances. They will sometimes be in front of very friendly audiences, but she's definitely ramping up her outreach to some of her strengths. Women, that with the Call Her Daddy podcast and The View. With one, you're getting a little bit younger audience. With one, a little bit of an older audience. I think we're going to see much more of these appearances in the final weeks. I think you saw Tim Walz on Fox News, which tends to be a little more aggressive against Democratic candidates. He was known for being quite good, quite strong on the Sunday talk show circuit. I think we're gonna see a lot more of him. And he was taking some tough questions about his debate performance. But on both candidates are going to be making a lot more appearances. They're just not necessarily going to be big national press conference type appearances. They're really going to go for those niche audiences where they see the potential for gains in a race that could be decided by just tens of thousands of votes.
And Bill, meanwhile, Trump returning over the weekend to the site of that first assassination attempt. It's remarkable to think there have been two. Returning to that venue alongside Elon Musk. What does the Trump play at this point?
Yeah, so a very interesting return. Obviously, it's a very different race at this point. On that first assassination attempt, Joe Biden was still the candidate. The audience was different. As you mentioned, the world's richest man, Elon Musk, making a very energetic appearance on stage. Also in that audience, hedge fund billionaire John Paulson. There were a lot of senior campaign officials, senior donors to the Trump campaign, really hoping to remind people of what former President Trump went through there. It's no coincidence that they're back in Pennsylvania where this happened. I mean, Pennsylvania is the biggest of the battleground states, 19 electoral votes at play there. Arguably, whoever wins Pennsylvania could just win the whole night. So this is a state where you're going to see both campaigns actively engaged in the next 3 or 4 weeks, with multiple stops over the last remaining days before the election.
OK, Bloomberg senior editor Bill Ferries on how this election is evolving. You can see pictures there of Elon Musk on stage with former President Donald Trump, of course. Bill, thank you very much indeed. Let's switch focus to the corporate space here in Europe right now, because in an interview with Handelsblatt, Commerzbank CEO Bettina Orlopp says she sees risks in a takeover by Italy's UniCredit. Let's get the details from Bloomberg's Oliver Crook, who's been, of course, following this for us from day one. Ollie, what do you make of what we've been hearing from Bettina Orlopp then?
Yeah, listen, Tom, so this is really her opportunity, again, as she's been trying to do, is to get in front of investors, get in front of the public, and try to give her pitch, yes, because she is now recently CEO, but why it makes more sense for Commerzbank to remain as a standalone institution. And in this interview, the first one, and we have to say that she's given since being appointed CEO and really thrown into this sort of chaotic situation that she's now facing, she's really talking about the risks that are associated, really talking about the downsides within the possible deal there. She was really saying that there's a big problem potentially with execution risks, that the sort of logic of a deal on paper is not necessarily the logic of a deal in reality. She's talking about also the amount of overlap that there could be between clients being a risk, and that this could all work basically, Tom, to the detriment of Germany and the Mittelstand, that's crucial SMEs, that basically where a company is headquartered has a huge sort of influence over the decisions that are made, and the fear of basically that headquarter now no longer being in Germany working to the detriment of those companies. So what she has put forward is to renew her sort of pitch that she made a couple of weeks ago, her 2027 strategy. She wants to remain independent. She's going to cut costs. She's going to work on boosting profits. In the interview, she was also asked, at what price does a deal make sense? She would not rise to that. She wouldn't give it, though she said that she was confident that she could get the shares of Commerzbank up to 25 to 30 euros a share. We should say, Tom, that right now they're trading at about 16.5 euros a share. With the sort of UniCredit premium already priced into it, to get it up to 25 or 30, that is taking it back to a level that we have not seen on Commerzbank shares since about 2011. So that is fairly ambitious, I think, by any standard.
Ollie, what have we been hearing then from Andrea Orcel over at UniCredit?
Yeah, so listen, I think he came in the door really loud and then has been a little bit quiet in the background. He gave an interview to The Economist over the weekend where he was basically reiterating many of the points that he had made so far, basically saying first that this was a totally legitimate and transparent approach. We made our ambitions very clear to the German government, so pushing back on some of the things that we've heard from the German government, while at the same time saying that there is also, continuing to pitch the logic of this deal, saying that there is actually a lot of synergies that can be gained between the small bank that they already own in Germany and Commerzbank, that there are not overlap in clients. He points to the region in Bavaria where this sort of synergy would work very well. One thing he did point to, though, Tom, and this is significant, was that there would not be many bank branch closures. He says that if there were a full union between these two banks, that most of the cuts would come at the head office. I don't know if that gives a lot of confidence to Bettina Orlopp, but maybe assuaging some of the fears at the lower level here.
OK, Bloomberg's Oliver Crook in Berlin on the latest from what we've been hearing from the CEO of Commerzbank, and an update as well from Andrea Orcel of UniCredit as we continue to monitor that story. Ollie, thank you. Now to some other pieces of news making, of course, headlines this Monday. Hurricane Milton is threatening to grow even stronger, possibly reaching Category 4. The storm may lead to the largest evacuation in 7 years as it heads towards Florida's Gulf Coast and Tampa. Milton comes, of course, just 2 weeks after Hurricane Helene, which caused 225 deaths and $250 billion in damage. Keir Starmer's most senior advisor has resigned just 3 months after Labour's general election win, in a blow to the UK's Prime Minister. Sue Gray is leaving her post as Chief of Staff at Downing Street, moving to a new role as envoy for the UK's nations and regions. The change follows weeks of internal infighting and mounting criticism of Starmer's political operation. And Bloomberg has learned that Tencent and the founding family of Ubisoft are weighing options, including a potential buyout of the French video game developer. Ubisoft shares soared more than 30% after the Bloomberg report on Friday. Let's bring in our deals reporter then, Manuel Baigorri. Manuel, why would Tencent make this move? What could it mean for Ubisoft? Where are we in terms of the details on this story?
Tom, what an interesting cross-border deal. One of those that we have rarely seen in the last few years, right? Some of the Chinese tech companies have been pretty quiet on the deal-making front. On this one in particular, I mean, it would make sense for Tencent to take advantage of the share price. Ubisoft has tanked dramatically over the last few months, and along with the family, explore a potential take private of the game developer in France. So it remains to be seen whether or not they will pull the trigger. It's something that they are evaluating with their advisors on how to proceed, but it's definitely one worth watching. Bear in mind, Tom, that the company has been under tremendous pressure from some of the investors who've been pushing the company to explore options in a pretty vocal way over the last few months. The company recently also cut the outlook for earnings after some of the titles are taking longer than expected to hit the market. So the company has been struggling for growth and to gain momentum, and that's triggered the share price to collapse quite significantly, and that poses some opportunities for some of those significant investors, including the family and Tencent.
OK, Bloomberg's deals reporter Manuel Baigorri, thank you very much indeed. We'll continue to monitor, of course, how that story unfolds in the days ahead. Manuel, thank you. Coming up, we're going to talk to the CEO and co-founder of UnseenLabs. It's a space tech company using satellites to track ships at sea. That is next. This is Bloomberg. Welcome back. Now, Hon Hai's Taipei listed shares are higher today after the company reported September quarter sales that beat estimates, driven by a ramp-up in shipments of AI servers. Let's bring in Bloomberg's Annabelle Drulers in Taipei on the ground for us. Talk us through the AI portion of these results then, Annabelle, and what it tells us about that demand.
It just really tells us and underscores how significant this business is becoming for the likes of Hon Hai, because AI servers are seen as perhaps one of the best growth drivers for this business moving forward. It's a part of the business where they're working very closely with the likes of NVIDIA in the design of these. They receive the chips from TSMC that are manufactured there. They then assemble these servers. They're sent off to these hyperscalers. So some of their customers, including Amazon, Microsoft, Alphabet, all about ramping up this AI cloud infrastructure. So that's where Hon Hai is really making gains here and becoming quite dominant in the space for manufacturing those AI servers. So in these latest figures for the third quarter period, we saw that component really doing quite well. And overall in the period, we saw sales of around $60 billion. That was better than what Wall Street had been expecting, and also better than what the company was expecting. They were saying it was their best third quarter results ever, though we don't know really the underlying sales for that. But certainly a key component and something we're watching, of course. Big Hon Hai Tech Day coming up this week as well, Tom.
OK, great stuff. Bloomberg's Annabelle Drulis on the ground for us in Taipei on those results and that continuing demand, at least for a component and a piece within the AI story. Let's stay on technology and broaden it out a little bit, because Houthi attacks on ships in the Red Sea have seen, of course, shipping costs soar over the last year. The International Maritime Bureau says piracy costs the global economy an estimated $25 billion annually. Joining me now, then, is Clement Galic, the CEO and co-founder of a fascinating company called UnseenLabs, which provides maritime security. And Clement, good morning. You're joining us on a week, of course, when you will be participating in the GP Bullhound All-Stars event as well, that focuses on some of the most interesting EV founders and startups in Europe. Clement, talk to us about what you guys do. What is the proposition? Who are your clients?
Hello, Tom, and thank you for that. Yes, so as you said, we are a satellite operator with 15 satellites in space right now, and we are working in the observation of the Earth in the radio frequency spectrum. It means that we do deploy antennas in space, and these antennas are able to detect, geolocate, and track the movement of emitters of radio frequencies. We do apply it in maritime domain awareness, and in fact, it gives us the ability to find and track ships without beacons, without any kind of systems on board. And basically, the ships were not willing to be found. Our systems, in fact, detect dark vessels at sea and provide a range of services for customers.
OK, so you work with governments and you work with corporate clients as well. What is the potential market size and scope of this market ultimately? What kind of dollar number can we put on this market?
The market size is quite huge. In fact, the market of Earth observation is between $5 and $6 billion per year nowadays. And the CAGR is the biggest one in the space industry of 10% yearly. So we have a full potential in this $6 billion. For now, the market is very nascent because we are creating it, in fact. But as you said earlier, the figures are huge in terms of infringement, in terms of loss for insurers, for state, and so on. So we are playing billion markets and so on. And as you said, we are working for public entities for illegal fishing, infringement, narco traffic, and so on, but also for the private market. With oil and gas, with subsea cables, typically, and economic intelligence, for sure.
OK, that's interesting. When you talk about oil and gas and you talk about those subsea cables, I think of the warnings from some states in Europe around potential attacks by Russia, for example, around European energy infrastructure. Is that a role? Do you have a role in protecting infrastructure from some of that kind of potential attack?
We are working for some of them, yes, but maybe we should work more with them, to be sure. But we have clear examples of unregulated activities around subsea cables or not far from oil and gas offshore production centers. So yes, for sure, we are seeing a lot of activities in Northern Europe, and not only in Northern Europe, for sure, but something actual, and it's something that we see every day. Yes.
OK, you design your own satellites, am I right in thinking? And you work with SpaceX, Elon Musk's SpaceX. What is that relationship like? Do you look to deepen that relationship? How many satellites do you need in space?
We need rockets to go in space. That's not a secret. And for now, the private market on rockets is quite small. Let's be honest. The SpaceX are very performing well in that, but we are not stuck to SpaceX typically. We already launched with Rocket Labs. Also, we launched with Arianespace. We are quite agnostic in terms of rockets, but SpaceX is there today. They have rockets. They launch frequently. So yes, it's not a partnership. It's more that it's a classical business relation. Not much.
Okay. Is Europe overly reliant on SpaceX? Do we need a European SpaceX, do you think, to really build out our space industry?
Yes, for sure. We need more European rockets. There are a lot of projects right now in France, Germany, in UK, everywhere. And for sure, in the coming years, the new European rockets will arise. But for now, we are quite in a slow movement, maybe change of generation. So it takes some time. It's normal space. But yes, for sure, we need for independence, and also as a private company, we need more rockets. We need more access to space, more diverse access to space. So yes, we need a European one for sure.
Okay, Clement, Galic, thank you very much indeed. CEO and co-founder of UnseenLabs, part of that space ecosystem, of course, and someone who will be appearing at the GP Bullhound All-Stars event later this week. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. We are counting down to earnings season. Yes, of course, we continue to focus on the macro data. We've got inflation out later this week. But the earnings season really kicks off with a verve on Friday, of course, with JP Morgan and Wells Fargo. Really important in terms of whether or not this equity market has legs, whether or not you're seeing some softness amongst consumers. In terms of the size and scale of some of these earnings that's coming through, then from today all the way through to November the 18th, you get an indication here, October the 21st and 28th, the big days in terms of the valuation of the companies that are reporting. Let's flip the board and have a quick look in terms of how expectations have adjusted lower in terms of third quarter earnings. You can see that edging down there. Analysts have been moving lower in terms of their forecasts around the earnings story. Again, you've seen an $8 trillion rally on the S&P so far, year to date, up about 20%. Will that be sustained? Analysts are going to be watching for that health of the consumer, whether or not some of these corporates holding back, for example, on spending around CapEx. Is there that caution starting to filter through? So the earnings season kicking off on Friday. Meanwhile, we continue to keep an eye, of course, on China. Goldman Sachs coming through with another bullish call. Tim Mo says you could get another 15 to 20% on Chinese equities after the gains that have come through. Already you can see that stretch out. Some others, like the Nomura and Invesco, a bit more cautious. Stay with us. This is Bloomberg.